Hi, this is Chris Buss with Traders Profit Compass with the closing market wrap for Wednesday, September 16th. Okay, so we had Powell and we had some fireworks at the end of the day. Let's go through the charts and see what we can see. Starting with the SPY 30-minute chart, we had been talking about for days since yesterday that price had to prove it. Bulls had to prove they could take out 342.50, the high from back here, September 10th. Couldn't do it for 2 days. Tried and tried and tried. Got up to the top. Got rejected after Powell, after the fake move, off of this level here, off of this 30-40 level. Came up, rejected, and then sold off pretty hard into the close. Now, this gap here from 340.60 to 338 has basically been filled. So tomorrow I'll remove that this little gap designation here in purple, and it'll all be up to 338. If 338 holds, we could see a bounce, maybe come up, and the same thought process would apply. In order for the bulls to keep it going, they got to take out 342.50. And now we've got RSI that has dropped below 50, so that's a bearish move. We had the bearish PPO cross yesterday, but we didn't really see any reaction in price, but now we have, and momentum is coming down. Now if we see momentum, the PPO line cross below the zero line, then that's kind of a confirmation we're on the downhill side of this thing, and you would likely see price coming back down below 338 and possibly down into this gap here between 337 and 334. So tomorrow, all eyes are on 338. Now, for trading purposes, that's your bull bear pivot. Nothing wrong if you see 338 holding and you want to try a long against 338 with a stop just below, that's fine. But if it breaks, then you've got to be looking for further downside. And the first support will be at 337 at the top of the gap. And if that breaks, the natural target will be to fill that gap and come down to 334. And then, then we'll be near the lows. And if the prior low down here at this other gap, 331.23, were to fail, then of course, then we're going lower. So a lot of work between now and then. I think, given the time spent here at 342.50 and given this sell-off, I think there's a slight edge to the bears at this point. But, the future remains to be seen. If 338 holds, then everything could turn around or be delayed until further notice. But if 338 fails, then we're looking at, more downside, probably coming into this 334, 333 support area. So that was pretty interesting. What's even more interesting was the Qs, because that's where the pressure's coming from. The the big cap tech has been really under pressure, and the same kind of idea. We were talking about this 280.50 area right here. Spent, all day yesterday and part of today trying to get through. Really couldn't do it. And then once it penetrated, excuse me, once it penetrated this gap at 277.70 that we highlighted this morning, then the natural move was to fill the gap, which it did. And this 275 line now becomes the key It's sitting, basically right on it. So tomorrow they've got to save this 275 in order to, keep the near-term bull case alive. I don't think they can do it, but it's not about what I think, it's about what the price action says. Your next support level below 275 is this gap at 273. And if that were to break, then I would expect a quick move down to 270, which was a key level. We had a slight undercut here. If 270 were to fail, then, this 267 area becomes really important to save the prior low. And if that breaks, then lower. But so for tomorrow, all eyes on 275. Above, bulls keep hope alive. Below, bears are in charge and looking to push it lower. Same idea up here on the RSI. We broke below 50 and also broke below this uptrend line that we had. And we had the bearish cross yesterday. Really didn't see much in price. But now, if PPO were to come across, cut below the zero line, cut below this little trend line I have here, then we would be back in the bearish regime where further downside would be favored. Moving on to IWM, really interesting day. If you were on your toes today, you could have really made some hay here. We had a back touch coming right out of the gate back to 153.70 for a back check. That would have been a great place to take a try at a long. We talked about that this morning. As long as it was above, it was bullish. Made a move up to 155 and hesitated. Pushed through. That was your second buy point. Remember, we talked about that this morning. Anything above 155 was bullish. Could have entered there. Got a nice $1.50 push up to this level where it found resistance and then let go. I sent out a note about, rolling and protecting, making sure that they didn't take that away. I hope that if you were long, I hope that got to you in time to at least take some money off the table if you had gotten long, at the beginning of the day or, after the first hour or so above 155. And that's something for your playbook. Whenever you're, coming into a zone of resistance, you've got to be on guard for, a rejection of that and, stay on top of your toes when you're in that situation. Because we talked about this morning, a break above, that was your target. It reached that target, could not go any further. And I'm sure this sell-off was primarily due to SPY and QQQ letting go. It's almost impossible for, IWM to, keep going higher when the bigger indexes are selling off. Now, that said, IWM was a big outperformer today. Despite this selling, it was still up 1%. And what you're seeing is the big mega cap tech names are becoming an ATM. Get out while the getting's good. Take some money off the table. And some of it is finding its way, into airlines, into restaurants, into the, back to normal trade. I didn't see the final numbers on airlines, but I was sizing up some charts midday. Up 3, 4, 5%, really nice days. And same with restaurants and restaurant wholesale service companies like Cisco, SYY. That's been real strong. Another company a guy's been all over is LW, Lamb Weston. They make French fries, believe it or not, and they're starting to move higher. So money's coming out of tech and going into some of the cyclical value names. And that's something we want to, pay attention to on IWM, because that's where, these smaller and mid-sized cap companies are in this index. So we may see continued outperformance in IWM going forward. Now tomorrow, 155 is your line. So remember we talked about, break above, back into the range is normally bearish, and that's true. As long as price stays below 155, you can be short, looking for a move back down to this 153.70 zone, which is now support, and see, if it breaks or if it holds. But if it pops above 155 tomorrow, let's say we have a green day, if it pops above 155, you can get long again and come back up to, 156.50. And if all of a sudden IWM starts outperforming and has a breakout here, then, 158, 160 becomes the target. So not everything in the whole wide world is bearish. It's mostly concentrated in tech. So we've got to be aware of the long side on IWM. But we'll just have to see how it goes. But tomorrow, 155 is the bull bear pivot. Facebook, horrible. We've been focusing in on this 273.20 area. Spent some time there and let go and came all the way back to the prior low. I think this will probably go ahead and come down to this 260, which is a big level. I don't know if I'd, try to get all involved in this, for it to just come down to 260 where there's a lot of support. I would probably wait to see what happens down here. That might end up being a nice long for a bounce off of 260, or it just may fail and come back down to 255. It depends on your time frame and what you're shooting for. If you're shooting for this to really let go, which on a measured move, it would be coming down to 255. If you want to, get short against the prior low, that's fine. And maybe just come on down and break this 260 and keep on going. We'll just have to see. But there is a good level of support here at 260, and I wouldn't just assume that's going to break. You'll probably see some type of a reaction down here. So tomorrow, it closed dead on the prior low. Anything below is bearish, and if it can stay above, then you might get a little bounce coming up here, but very weak price action, all things considered. And really, when you think about it, given that decline, that was a very weak bounce. Not to be able to even, come up and take out that 273.20 level. Very weak price action. So, the bears are in control of Facebook. They're in control of Apple too, as a matter of fact. I know we've talked about it before, but I'll re-emphasize it. Whenever you see momentum, break below zero and then come back up to the zero line and roll over, that's usually very bearish. Just like on the bullish side, when you have momentum coming down to the zero line, it's often a place where it finds support and then moves back up. So the zero line becomes really, really important on momentum and can serve as support and resistance, support from the top side, and then resistance on the downside. So as we see here, momentum has come up to the zero line and now has rolled over. That's usually very bearish, and we can see that RSI peaked above 50, never really got going, now is down below, back in its bearish regime. Price has fallen away from this 118, which we identified as resistance, and came down. And on the trade advisory, we got short on this break of 113, and I'm looking for a move down to 110 at a minimum to tag this prior low. Now, when it comes down here, we'll have a decision to make. Do we, if it does, if it comes down to this, 110, 109 area, do we congratulate ourselves and, take the money off the table? Or do we roll down, take money off the table and stay in the trade and hope for this gap to fill? We'll have to decide that. But the bears are in control. Very weak bounce after a big sell-off. Couldn't get through this 118, and now has broken this line of support at 113. So I'm looking for lower prices there. Amazon, what can I say? Disaster day. We had identified this 3150 level as being support, as a key level. Once it broke, it held for a few hours and then let go. And that's something, just for trading. If you've identified this area, 3150, and you got short on this break, and then you saw it kick back and hover there for several hours, that can be a frustrating trade to hold. You're expecting, something to happen. It's not happening. But the key is, as long as it hasn't taken out your stop, you're still in the game. And if you notice here, it's hard to see because we've got a lot of different lines, but once it broke below this 3150, it never really came back above. There shouldn't have been any fear in your mind that you were wrong. You shouldn't have been scared out of that trade. You might have been frustrated, but there wouldn't have been a objective reason to close it because it was still below, and then you got the flush move. Broke through this 3100 area, came all the way down here to this 3052. Now, if you're short, that's your key line. If it loses 3050, then you're getting a move down to 3000, and I think that's definitely within the realm of possibility. So coming into the end of the week, if you've got weekly options, don't be afraid to roll that down and take this money and put it away and see if you get that final move into the end of the week. That would be a great trade. But I would expect a little bit of a hesitation at 30.50. Don't let that scare you. Depending on where you're positioned and what options you have and that kind of stuff, you'll have to manage that. But I wouldn't be totally frightened, if there's a hesitation here at 30.50, because all the algos, everybody sees what we see, and there'll be some buyers that step in there knowing that it's a support level. So I think they're going to get run over, though, to be honest with you. Again, RSI never cleared 50, staying bearish the whole time. PPO never even got up to the zero line. It's rolled over below. That's usually death, to be honest with you, when you get a rollover and it doesn't even get up to the zero line, that's usually very bearish. Microsoft, not any better. Again, these, in a way, they're all the same. They made a little baby rally back up to the zero line, has rolled over here. RSI peaked above 50, but now has rolling over again, so it stayed bearish the whole time. We had these levels pretty well lined out. This was a head fake move. Never really could clear 209 with any authority, and then it pulled away and came down to this 204.50 level, which is kind of the last, or at least the near-term support level. So tomorrow, 204.50. If it breaks that, it's going to 202, 202.50. And then if it breaks the prior low, then you're probably looking at sub 200. If you recall, on the daily charts, we had a target down in the mid 190s and potentially all the way down to 190, which was the original breakout. So I'm looking for this to go lower, aside from any baby bounces it might have. All things are pointing lower, and I would be leaning in that direction, looking to fade bounces and looking to short breaks of support. Google, same story. This morning we said it had to hold 1538, couldn't do it. Right back down to the bottom of the box, down towards 1505. And, we got a lot of levels down here as potential support. Probably not the easiest trade in the whole wide world. But if you're in it short, I think you can stay short and look for a break of this 1505 to open the door down to 1490 and then potentially down to 1465. Again, PPO rollover below zero. RSI staying bearish. No reason to really think long at this point. Bears are in full control of this. Netflix offered a nice opportunity today. We talked about 494. It had to hold, couldn't do it. Once it broke below, gave you that back check that we always talk about. Initial break, kickback rally to resistance that fails, and then it fell away. Now tomorrow, 485 is the key. It closed a little bit below, but let's just say that was an overshoot. Anything below 485, you'll be looking for the prior low at 475, and if that doesn't hold, 465. So those are your downside targets. On the upside, if this holds and there's a little bounce, if you're going to try and game that, you can be long against 485 and see where it takes you. You might get a kickback rally up to 494 again. I think on this one though, just given the whole thing, I would let the bounces go. And if you got that bounce, be looking to short 494, 495. If you got it, I think that's free money, to be honest, because then you can short at a higher level and then get that move back down. But we'll see what happens tomorrow. You'll have to, manage that as you see it. But 485 is the key. If it can't hold that level, 475, then 465. Tesla was a nothing burger today. It just, it just hovered. Really didn't do anything at all. That's outperformance right there. To see that really didn't give anything back to speak of. I think it was less than 1%. But tomorrow, if you saw a break into this gap at 430, 431. I don't even know if $10 is worth it on Tesla. I mean, you got to get a major move. But the PPO has put in a bear cross, and RSI has dropped below. But I mean, this remains strong. I don't think this is worth trying to short at this point. It's probably more of a long. I think it's kind of doing its own thing, to be honest. I'm not the authority on Tesla, but just looking at the price action, I think you'll know the downside if you see it. You know, if it breaks this channel low down here at 420, something like that, then you got some downside momentum that you can jump on. You know, if this really lets go, I think you'll have a much better shot at capitalizing on something. But, I mean, let's face it, the options are really, really expensive, and you've got to get that move right, and you got to be right fast, or you know, you'll be eaten alive if you're trying to do weekly options. And speaking of that, if you had weekly options, just this day's worth of hesitation had to hurt. When you buy those things, it's got to move fast. They're so expensive and so much implied volatility in it. Just even a day of sitting around doing nothing, you're going to lose if you're holding either calls or puts. So when you get in something like this, where everything is jacked, you got to have a pretty, you got to have a clear shot. You got to really nail it in order for it to capitalize for you. I don't have a gold chart handy. I spent a lot of time on that today, looking at it. There was a little move higher out of the Fed, but then it closed flat. Really a nothing burger. I did notice that UUP, the proxy for the US dollar, was up a few ticks, so there was some minor strength there. We'll see how that plays out in the days and weeks ahead, and see if my thesis of a dollar short squeeze pushing the dollar up, and that euro US dollar pair getting rejected from that resistance level pans out, and we get a pullback in gold that we can buy at nice support. So interesting day. I hope you capitalized on some of those levels that we pointed out this morning if you're an active trader. Just to summarize, money continues to come out of mega cap tech. People are using it as an ATM for a source of funds, and some of those funds are finding the cyclical beaten down names. You will probably see, just because of the weighting, SPY and QQQ go down, but that doesn't mean some of these beaten up cyclical names can't go the other way. So I'm going to be taking a close look at airlines, restaurants, suppliers, some of the other names, and see if we can get, a long short setup going where we can play tech to the short side and some of these cyclicals to the long side. Hopefully that trade would, have some duration to it and not be short-lived like it has in the past. Okay, I hope you liked the content. If so, please hit the like button and subscribe to the channel if you're new. Certainly love to have you on board. Look over in the show notes and you'll see links to the blog site. A lot of interesting and hopefully helpful articles in the trading psychology section, and some of the trade school tips and tricks that I've posted along with the daily content. If you subscribe to the blog, you'll get all my content each and every morning and throughout the day as I see things developing in the market. This has been Chris Bus with Traders Profit Compass. Thank you so much for the time today. Talk to you next time.